Every day, investors search for the next great opportunity. They study companies, read financial statements, follow the markets. Yet sometimes the greatest opportunities aren't hidden at all. They're simply overlooked. More than half a century ago, thousands of experienced investors examined the same company and reached the same conclusion. It was a business in decline, nothing special, nothing worth owning. One young investor reached a completely different conclusion. He believed the market wasn't seeing what was right in front of it. He was right. That investment would become one of the defining moments of a legendary investing career. The question is, how did a young investor discover extraordinary value in a company that thousands of experienced investors had already dismissed? Long before the world knew his name, long before annual shareholder meetings attracted thousands of people, there was simply a young investor searching for opportunities others overlooked. He was disciplined, patient, methodical. Rather than following popular opinion, he spent countless hours studying annual reports, financial statements, and company filings. He believed that every business had an intrinsic value. Sometimes the market recognized that value, sometimes it did not. When the market overlooked a business, he saw an opportunity, not because prices had fallen, but because facts could be different from perception. That approach required something many investors found difficult: independent thinking. It also required patience. Opportunities like that did not appear every day, but when they did, he was ready. Then, one company caught his attention. At first glance, it looked like exactly the kind of business most investors avoided. That was precisely what made it worth investigating. The company was called Sanborn Map. For decades, it had been one of America's leading publishers of detailed fire insurance maps. Insurance companies relied on those maps to evaluate risk throughout the country. But the world was changing. New technologies and changing business practices gradually reduced the demand for printed maps. Growth slowed. Investors noticed. Wall Street saw a company whose best years appeared to be behind it. The market had little reason to be excited. Revenue was no longer telling an inspiring story. The future looked uncertain. Many investors moved on, searching for companies with brighter prospects. On the surface, that decision seemed perfectly reasonable. The young investor reached a different conclusion. He wasn't interested in what the market believed. He wanted to know what the evidence actually said. So instead of walking away, he opened the company's annual report. The annual report contained the same information available to every investor. There were no hidden pages, no confidential documents, no insider information. Everything was there for anyone willing to read it. The young investor studied the balance sheet. Then something caught his attention. The market was focused on Sanborn's struggling map business. But the company owned something else. Over the years, it had quietly accumulated a valuable investment portfolio. Stocks and securities whose value had steadily grown. As he examined the numbers, an extraordinary conclusion began to emerge. The investment portfolio alone appeared to be worth more than the market was assigning to the entire company. The market wasn't valuing the company's underlying assets. It was valuing its struggling map business. Thousands of investors had studied the same company. One young investor studied the same evidence. They reached completely different conclusions. The hidden value had been there all along. Only the young investor had recognized it. Discovering the hidden value was only the beginning. The market still disagreed. Every day, investors continued valuing Sanborn as if its struggling map business was the whole story. The young investor believed something important was being overlooked. He believed the evidence. The market believed the narrative. Two completely different conclusions, drawn from the very same company. That presented a new problem. Finding the hidden value is one thing, unlocking it is another. Most investors would have waited, hoping the market would eventually recognize what the young investor was seeing. He reached a different conclusion. He decided the evidence was strong enough to act. Quietly, he began accumulating shares. His decision wasn't based on hope. It was based on a careful analysis of the company's underlying value. Time would eventually reveal whether his analysis was correct. As his ownership increased, he gained something more important than additional shares. He gained the ability to influence what happened next. Working with other shareholders, he advocated separating the company's valuable investment portfolio from its struggling map business. Once those assets could be evaluated on their own, the hidden value was no longer hidden. The market finally recognized what had been there all along. The opportunity had never been invisible. It had simply been overlooked. The investment succeeded, but its greatest impact was still to come. The investment was successful, but its greatest return wasn't measured in dollars. It confirmed something the young investor would carry with him for the rest of his career. The market does not always recognize value immediately, but eventually, value reveals itself. That single investment became far more than a profitable opportunity. It became proof that careful analysis could uncover value long before the rest of the market recognized it. It reinforced an approach that would shape every major investment decision that followed. Not chasing excitement, not following the crowd, but patiently searching for the difference between perception and reality. Years later, the world would come to know that young investor as Warren Buffett. Millions would study his investment decisions. Countless books would be written about his philosophy. Yet one of the defining moments that shaped his career began with a company almost everyone else had already dismissed. And that may be the most important lesson of all. The greatest investment opportunities are not always hidden. Sometimes, they are simply overlooked. The question is, what are we overlooking today?